All right, today we're going to dig into the latest financials from Azure Power, one of India's big renewable energy players. And their numbers, well, they've served up a fascinating puzzle. It's a real head-scratcher that seems to fly in the face of Business 101.
So let's just put the big question right out there. How in the world can a company's profit situation get way better while the actual money it makes from its day-to-day business goes down? It sounds kind of impossible, right? Well, that's the puzzle we're going to solve today.
Okay, so the headline number? It's seriously impressive. In the first half of the fiscal year, Azure Power slashed its net loss in half, a full 50%. You know, in an industry like this that eats up a ton of cash up front, getting a handle on your losses like that is a huge signal to the market. On the face of it, this looks like a massive win.
And here is where things get weird. The core contradiction. The good news is undeniable. They cut their net loss in half. Think about that, from over ₹1 billion down to just about 505 million. But, and this is a big but, at the exact same time, the revenue from actually selling power went down. Now, it wasn't a huge drop, but in a booming field like renewables, where growth is the name of the game, any drop in your top line is a serious red flag. And that, my friends, is our puzzle.
So the question is, how'd they pull this off? It wasn't magic, I promise. It was actually a mix of some really aggressive financial management and one very specific, totally game-changing event. And we're going to break it all down, piece by piece.
So here's our plan. We'll start with the top-line troubles to figure out why revenue dipped. Then we'll hit the bottom-line boost. We'll uncover this Karnataka project payday, which was key to the whole thing. And finally, we'll look at the road ahead.
All right, part one, let's get into these revenue problems. I mean, if you're a power company, your whole reason for being is to generate and sell power, right? So when that number starts to drop, you've got to ask why.
And just so we're all on the same page here, when I say operating revenue, I'm talking about the money they make from their core business, making electricity at their solar plants and selling it. This is the real nuts and bolts of their health. It cuts through all the financial noise and just tells us, is the main business doing okay?
This table, well, it lays out the story pretty clearly. See, it wasn't just the money that went down. The real issue, the root cause, was that they actually generated less power, about 2% less. And that, in turn, dragged down their plant load factor, or PLF. Just think of PLF as an efficiency score for a power plant. And yeah, that score went down. Their assets just weren't working as hard as they were the year before.
So why the drop in productivity? Well, it boils down to two things. First, something called irradiation losses. It's a fancy term, but it basically means they got less juice out of the sun, either because of weather or maybe the panels just weren't as efficient. Second, they got rid of some of their rooftop solar assets. That probably means they're trying to focus on bigger projects. But the big takeaway here is pretty straightforward. Their main job, making power, was just a little weaker this period.
Okay, so we've established that the top line was struggling a bit. Less power, less money. Simple. But now for the really interesting part of the story. If they were making less money from their core business, how on earth did their losses shrink so dramatically?
Here's our first clue, and wow, it is a doozy. They took a knife to their overhead costs, what's called general and administrative expenses, and cut them by more than half. A massive 54% drop. We're talking salaries, office costs, legal fees, the whole shebang. That's not just trimming the fat, that's some serious financial surgery.
And clue number 2 is just as big a deal. They cut what they pay in interest by a whopping 25%. You got to remember, building these huge solar farms costs a ton of money, and most of that is borrowed. So interest payments are this constant, massive expense. Chopping that down by a quarter, that makes a huge difference to the bottom line. So you've got these two huge moves, slashing overhead and cutting interest costs. But here's the kicker. These enormous cuts didn't just happen out of nowhere. Nope, they were both supercharged by one single event, a huge legal win that basically flipped their whole financial story upside down.
And that brings us to the hero of the story, if you will. A big, long-running legal fight over a project down in the state of Karnataka. And when they finally won, it wasn't just a small victory. No, this was the key that unlocked the entire puzzle. While these kinds of disputes happen, winning this decisively and for this much was pretty rare.
So here's what went down. A big electricity court basically said, hey, your customer has been shortchanging you on your contract. The ruling was simple. The customer had to pay up what they owed, plus a big penalty for paying so late. And after the customer lost their final appeal, that money was guaranteed. It was coming.
And this is where you see the incredible domino effect. It's awesome.
First, they got a direct cash payment of 247 million rupees, which helped plug the hole in their revenue. Second, and this is the huge one, they got 912 million rupees in late payment fees. They used that to directly cancel out their own interest payments. And boom, that's how they got that massive 25% drop. And third, a little bit of accounting magic. They'd set aside 500 million rupees just in case they lost the legal case. Since they won, they could put that money back on the books, and poof, that helps slash their overhead costs.
So there you have it, puzzle solved. The huge improvement in their profit wasn't because they were suddenly a better power company. It was all thanks to this one-off legal victory that sent these incredible positive ripples across their entire financial statement all at once.
Okay, so we figured out the past. What about the future? Now that their books are looking a whole lot cleaner, what's their game plan for growth? And what kind of trouble might be waiting for them around the corner? If you look at what they're building now, you can see they're really changing things up. On the one hand, they have a solid chunk of new stuff in the works. But on the other, they've also canceled a ton of previously planned projects. We're talking over 3,000 megawatts worth. This tells me they're getting a lot more focused, maybe a little more cautious, and ditching some of the really risky, complicated ventures they were looking at before.
But even as they're getting their own house in order, there is a massive risk looming on the outside. And this isn't just a potential problem for Azure, it could hit the entire renewable industry in that part of India. It all comes down to a bird, the great Indian bustard. It's critically endangered, and India's Supreme Court is trying to protect it from flying into power lines. The problem? The bird's prime habitat is also one of the best places in the entire country for solar and wind power. So, the court has suggested that in a massive, priority area, all power lines might have to be buried underground. And for a developer, that is a total nightmare. Burying those high-voltage lines is insanely expensive, like 10 times more expensive, and it could make a whole bunch of projects just completely unbuildable. Even Azure admits this could cause significant costs and delays for them.
Okay, so we've solved the profit puzzle, and we've looked at the big risks on the horizon. Let's tie this all together. What's the bottom line here? What should you take away from all this?
I think it boils down to three things. One, Azure has proven they are really good at managing their money. They were disciplined and they won a huge legal fight that completely fixed their books. Two, but that financial win was a one-off. It kind of papers over the fact that their actual business of making and selling electricity got a little weaker. And three, their future is all about balance. They have to build out their new, more focused projects while somehow dodging this massive bird-related legal issue.
Which really leaves us with one big critical question. We know Azure's finance team can pull a rabbit out of a hat, but long-term success in the energy game isn't just about spreadsheets, it's about making electrons. So now that the books are clean, can they get back to the real business of making more power? That's going to be the real test for their future. Thanks for tuning in.